Okay. As Steve mentioned, my name is Andrew Jones. I work with a company called Timber Creek Asset Management. I've been kicking around the commercial real estate industry for about 20 years, and I've been with Timber Creek. I've been involved actually since inception, and been there full-time for about 6 years now. I'm going to just talk quickly about Timber Creek and then the different real estate investing options, then touch on the sectors, and then get into the market and investment fundamentals of the Canadian landscape of the Canadian marketplace. And then we can talk a little bit about investments today. So Timber Creek is an asset management company. It was founded by a couple of my partners about 13 years ago. We currently manage $3.2 billion. We have three buckets that we use for investing. We have a private equity bucket, which effectively means we buy real estate. We buy apartment buildings across Canada, a couple $1 billion there in 6 funds. That's all institutionally funded. And then we have private debt, which is really what I focus on. We have 2 publicly traded mortgage investment corporations that total about $1 billion. And we have public equity and debt funds. So those are funds that invest in public real estate stocks, bonds, and other derivatives, all in about $3.5 billion. Just to comment, our focus at Timber Creek is the commercial real estate market. I will talk about housing today, but we are really investment real estate specialists, and we focus on the commercial market, primarily in Canada, although we are now starting to expand globally. Our real estate securities funds are global real estate securities funds, and we are now buying assets in the U.S. So the different options, there are a couple ways to invest in real estate. The first is investing in the equity. Investing in the equity effectively means that you're buying the properties. You're taking in an equity interest in the properties. The equity is typically a more volatile investment. Your investment's going to fluctuate in its valuation. It's going to go up and down at different times. But if you pick the right investments, your timing is okay, and you have a good manager, there's a good upside in long-term real estate holdings. The debt side tends to be a lot less volatile. It's probably, I liken it to a more fixed income type investment. Investing in real estate debt will not bring you any long-term upside, but you do mitigate the downside when investing in debt. So if there is a correction in the market, you will not likely get impaired in the short term.